Taxes, they can feel like this impossible maze, right? But what if I told you that for some people, the tax system isn't really about paying the government at all, but about the government paying them? Today, we're going to follow the money, step by step, through one person's actual tax return to see exactly how that can happen. So let's dive in. All right, so here's the big question, the central mystery we're going to unravel together. Is it actually possible for someone to earn close to $25,000, pay absolutely zero in federal income tax, and still get a check from the government for over $7,000, maybe even more? It sounds totally made up, but I promise you, it's not. By the end of this, you'll see exactly how the system is designed to make this happen. Okay, but before we jump into the really juicy numbers, we've got to clear something up first. The taxes you see coming out of your paycheck aren't all the same thing. So let's do a quick breakdown of the two main types. So on one hand, you've got Social Security and Medicare taxes. You can think of these as specific pots of money set aside for our social safety nets, retirement, and healthcare. But on the other hand, you have federal income tax. And that's a whole different animal. It's the money that funds pretty much everything else the government does. And when I say everything else, I mean it. We're talking about the Department of Defense, the Department of Education, roads, bridges, national parks, you name it. This is why the income tax system is so complicated. It's basically the engine that powers the entire U.S. government. All right, now that we've got that straight, let's meet the person at the center of our story. This is where all these abstract ideas get real, with actual numbers. So this isn't some made-up example. We're looking at a real-deal case study here, which is pretty cool. And it illustrates a fundamental rule of the U.S. tax system. Just because you earn money, that doesn't automatically mean you're going to owe tax on it. So let's break down the key facts about our taxpayer. Their filing status is head of household. They earned just under $25,000. And they have 3 children. Now look at that last point. $0 in federal income tax was withheld from their paychecks all year. That little detail, that is huge. Remember that. And right there, those 3 kids, that is the secret key to this whole thing. And it's not an accident, it's completely by design. The tax code isn't just for raising money, it's also a tool for social policy. And as our source material points out, the system is built explicitly to give some really significant financial benefits to people with children. Okay, so you've got this total income number. How does it get so much smaller before the IRS even thinks about taxing it? Well, this is where the magic of deductions comes in. It's like watching an income disappear right before your eyes. Here we are looking at the good old 1040 tax form. See line 11? That's the adjusted gross income, or AGI. Basically, you can just think of this as the starting line for all our math. It's your total income minus a couple of specific adjustments. So that's our number, $24,568. But, and this is maybe the single most important thing to get about income tax, you're never taxed on all of your income. And the very first thing the IRS does to shrink that number is apply the standard deduction. Honestly, the easiest way to think about it is like the government just gives you a free pass, a huge discount on a big chunk of your income. No questions asked. And you can see it right there on the form, line 12. The size of this discount just depends on how you're filing, if you're single, married, or in this case, head of household. And for our taxpayer filing as head of household, that deduction is a whopping $21,900. I mean, think about that. It just vaporizes almost 90% of their income, just like that. So after that one massive deduction, what's left? What's the actual taxable income? Just $2,668. Wow. We went from almost $25,000 all the way down to less than $3,000. That's an enormous difference. But wait, shrinking your income is only part one of the story. Now we get to the real game changer in the tax system, credits. This is where things get really interesting. Now, it's super important to know that not all credits are the same. You've got non-refundable credits, which are powerful. They can wipe out your tax bill down to zero, but that's where they stop. Then you have refundable credits. These are the ones that can wipe out your tax bill and keep going, turning into a payment from the government straight to you. So first, let's figure out the tax. A 10% rate on that tiny income is only $266. But then, boom, the non-refundable part of the child tax credit kicks in. Since the credit is bigger than the tax, it just completely erases the bill. And poof, Just like that, the $266 tax bill is gone. It's zero. Our taxpayer owes nothing. But hold on, we're not done yet. Remember those refundable credits we talked about? This is where the story gets really wild. All right, now we get to the final part of the return. And honestly, this is the part that blows most people's minds. This is where the government actually starts writing a check to our taxpayer.
This quote from the source material is absolutely crucial, so I really want you to hear this. The money we're about to see is not a refund of taxes they overpaid. They paid zero, remember? This is brand new money. It's a payment, a social benefit, from the IRS directly to them.
And here's how it all adds up. Our taxpayer qualifies for two huge refundable credits. First up, the Earned Income Credit, which comes out to $7,439. Then, you tack on the additional Child Tax Credit, which adds another $3,310. So you add those two together, and there it is. The answer to the question we started with. After earning nearly $25,000 and paying absolutely nothing in income tax, this person gets a check, a direct deposit, from the U.S. government for $10,749. Incredible. So, we did it. We solved the puzzle. But what this really shows us is something much bigger, isn't it? It proves the tax code isn't just about collecting money to run the government. It's a massive, powerful tool for social policy, for delivering benefits, and for supporting families. So what is it really? A tax system or a social benefits program? And the answer, when you look at it this way, is that it's both. And that's something worth thinking about.